Hey there everybody, Thomas Wood with Basecamp Trading. It is Wednesday, February 1st, and we're going to take a look at gold and one of the trade setups from the futures trading room. That was a short setup, first thing this morning, and it was based off of an intraday channel. So you can see here on the 5-minute price chart where gold was just moving sideways inside this range. We had resistance up at 1214.2 and support down at 1211.6. Well, look at our momentum. We ended up having pretty obviously bearish momentum, put in lower highs, lower lows, and we started to roll over here. Now, we also have at the bottom of the chart the MTAM indicator, okay? Now, MTAM is looking at, it stands for multiple time frame analysis of momentum, and what it's looking at is momentum across multiple time frames. Okay, so it's looking at the momentum across several different time frames. In this case, I'm looking at a 5-minute, a 10-minute, and a 15-minute price chart. Now, when all three of those time frames have bearish angled momentum, our indicator line is angled down, it's going to put red dots up here. If they are all angled up, it's going to put green dots. Well, if you look at where the big moves in the market take place, they normally happen when you have all of your time frames in alignment. So you can see as of this point right here where this vertical line is, we changed to bearish momentum across the board on all three of those time frames. And then we proceeded to turn and run straight down. Now, this came off of a news announcement. It broke the support for the news announcement. So this initial move, I'm not going to sit here and tell you that you probably would have gotten in, because you probably wouldn't have, at least not without some slippage. However, what we ended up doing is we broke down and then we formed a bear flag. Now, what do we want to do when we're looking for bear flags or for bull flags? You want to take the first flag after the breakout. So if this was the breakout, then this was the first flag after the breakout. And that gives you your entry to catch the rest of this run down. And that would have had you selling when that flag triggered at about 1207.8 with a stop at 1209. So you're talking about $120 contract stop. And this ran, all your red bars stopped being in agreement. You stopped having bearish momentum on the MTAM down to 1206. But the entire move ended up running all the way down to a low of 1200. So you're talking $120 contract risk for a potential almost $800 contract run. And that's what we're looking at, is we're looking for these high probability reward risk trades where you have multiple of your risk in the return. So when you hit a runner, it will pay for several losers. And that's one of the reasons that we drill down and find short-term entries within the context of a longer-term setup. So that's all I have for you for today, though. Keep an eye out, though, for intraday channels like this, especially when they've lasted about an hour or two, like gold had. And then when you break out, normally you're going to get a very, very fast reaction. So that's all I have for you for today. Until next time, happy trading.